What is up, investors? Back again. Another stock analysis. Netflix, ticker symbol NFLX, just came out with their earnings. And as you can see, this stock is selling off rapidly in the after hour trading. Now, these things can bounce around, as you're seeing right now. This thing can bounce around. Netflix will have a conference call depending on how that goes. This might turn around or it might go further down. We'll see what happens. But if you've been looking to get into Netflix stocks, this is a nice pullback. We are seeing kind of a rounding top here on this stock. Made a huge move. It was down in I think the 200s back earlier in the year. The 52-week low here we can see was at 252, and this stock has rallied all the way up over $500 today, and we see in the after hours ticking back more to 475. For me, it's probably still a little richly overvalued. We'll see what happens when we read these financials. So the first thing to take a look at is this guy, Ted Sarandos, is appointed co-CEO. And so this might spook some people because Reed Hastings is, I believe, the founder and CEO and very well regarded, and obviously has done a tremendous job running Netflix. And maybe this guy being appointed co-CEO might have people thinking Reed might be on his way out. That's just a speculation. We'll see what happens. But let's jump into the numbers. Let's see why this stock is trading off. And I think it's actually pretty obvious when you jump into these numbers here. We've got top line revenue here. We've got the most current quarter here, Q2 20. And then they actually gave a forecast. So that's actually kind of nice. We're seeing actually this forecast. I think that has something to do with the stock trading off a little bit because we're seeing the forecast is for 20% growth, when as you see for the last year or so, they've been in this mid 20s, even 30% growth. And even in the most current quarter, mid 20s, they're seeing that drop down, likely because this company hasn't had to spend a lot on content. They produce content, so they haven't been producing content because a lot of things have been shut down. So that might hurt some revenue. It certainly will impact profits and things like that. They also experienced tremendous growth here. As you see up here, they added 26 million paid net ads, which is customers, versus the prior year of 12 million. So they added all these customers, 26 million in 6 months. And then they did it the whole year. Last year was 12 million. And look how, I don't want to say little revenue jumped. We can see here it went from 6.1 up from about, call it 5 billion. You're adding that many subscribers, but you're not really seeing like huge revenue jumps here. It's staying in line with where it's been traditionally in the past. And so I think that's what's got investors a little bit frustrated with that kind of thing going on. Operating income we see ticked up nicely, probably because, again, they have less expenses. Those expenses are going to be carried forward to another quarter and maybe even into later this year and likely into next year when they start producing films again here in the United States and around the world. Operating margins ticked up nicely again, but you see here they're going to go back down to a little bit more normal level in Q3, again because they're not spending quite as much on content. We see net income that also impacts that, although it's not as much as it's a little bit more than the previous quarter. They're actually seeing it tick up again in Q3, so that is nice. And we see EPS here is not a stat that I pay too much attention to. Global streaming paid memberships, we see here, quarter over quarter it's grown, and then obviously year over year it grew tremendously, but it's still, in line here. 27% is obviously a big jump when you're talking about this large of a company, but then they see it trending back down to 23% growth. Again, stellar growth. I'm not trying to act like it's something to sneeze at, but here you see the 26 million net paid ads here, and then you see what normally that they trended at, but also look at this. What they're projecting in Q3 is actually the lowest number that we've seen in over a year for the company. So Netflix is projecting that everybody that has signed up for Netflix or wanted to sign up for Netflix has signed up. And I think that is impacting kind of the after hours because investors are now starting to say, well, wait a second, is this going to top out at 6 billion a quarter? In a great quarter, they're going to top out at 6 billion and net income of 720. And this is a company that trades at 106 PE ratio. It's probably not completely up to date, but that's a hefty valuation. And so if they start seeing signs that this company is going to start slowing their growth a little bit, then that might be a problem. And that's something that investors have to take into account. Net cash provided by operating activities obviously exploded in the quarter. You see other quarters where they have these big negatives. My guess is they're really investing in content. They're either buying a library or they're producing shows. They're paying directors and film crews and actors and actresses and things like that. Free cash flow ticked up really nicely as well. So this is a company that's well positioned to move forward. But again, you have to wonder, is this company going to top out? Is everybody that wants a Netflix, I don't want to say everybody, but is the big growth days, did we just accelerate Netflix growth into the last 2 quarters? Like, they were going to see this growth probably one way or another, maybe over the next 2 years. Did we just pull it forward for 2 quarters and then the stock reacted, and then now it might adjust to the level that we think it's more to? I think that's playing into it as well. So we've got adjusted EBITDA here. We see that is actually in line with some of these other quarters as well, obviously nicely up from year to year. We see streaming content obligations stayed relatively flat. It'll be interesting. They didn't give guidance on that, and maybe that's not something they have visibility into, but it'll be interesting to see if this ticks up, because they had a quarter or two where they haven't been able to maybe invest or film and things like that. Does this tick up, and how does this impact free cash flow and adjusted EBITDA? The last thing I want to show you, well, here's kind of in a graphical form. Boom! They had this explosion of people that signed up for the platform, and it's kind of going to trend flat now. Last thing I want to show you before we get back to the stock chart and I tell you what price I would buy Netflix at, is we see here, average revenue per user. We see here, this is like probably the United States and Canada. We see this has stayed relatively flat. It's actually ticked up nicely year over year. Same with, this is Europe, I believe. A little bit less than the United States, but a little bit of growth there. But what's interesting here is you got ARPU. I guess if you count FX neutral, I don't ever count. Since when has currency ever been neutral? Currency fluctuates all the time, and so I don't tend to, put much stock into neutral. But it actually went down. You see here, the average revenue per user in Latin America went down. And so that's kind of a problem. And actually you see revenue went down, paid membership went up a little bit. And you're also seeing that in Asia Pacific as well. The actual revenue per user ticked up just a little bit, but it's not much. As you see year over year, it's actually down, and same here, it's actually down. So they're not driving the revenue that you'd like to see maybe in some of these other companies, particularly because of currency fluctuations, but that's the world you live in. So where would I buy Netflix? I actually would like to see it. I think I did a video where I said I'd like to see it pull back down into this mid 300 range. I think that would be an interesting place to obviously start a position. I think maybe more realistically, if you want to jump the gun and really get in front of Netflix, maybe at this 420-ish level, to me, could be another one. You see the stock kind of traded sideways here. If you zoom this back, these peaks here are at right around that 375, 400. To me, that would be an interesting spot. Anywhere in here, although you risk buying here and then it dips down back into the 260s. 260, 275 would be money if for whatever reason this stock breaks trend. It appears that it might break trend, and maybe even the NASDAQ as a whole breaks trend, because look, Netflix and Apple and Amazon, they've really pulled forward a lot of demand that they were going to see over the next few years, and their stocks reacted to it, probably appropriately, but now investors are going to start digesting it, and I don't know if you're going to see that exponential move again with Netflix. So I would be patient here. Obviously, if you're a holder of this stock, you bought it back in the hundreds, 200s, even 300s, I wouldn't really be worried too much. And if it pulled back for whatever reason down to the price where you bought it at, I think I'd feel comfortable buying it again. But if you're looking to get into Netflix, to me, like I said, they pulled forward a ton of demand that they would have seen over the next 12 to 24 months. And I think investors are starting to realize, well, maybe that demand now over the next 2 years is going to be hard to get. And so this stock probably likely trades sideways for the near future. That about wraps it up on this one. Hopefully you guys enjoyed it. We'll be back again later this week. Hit that subscribe button. Good luck with your investments.